The funny thing about the trade deficit is that you couldn't have had SoftBank generate the $100 billion to invest in the United States without the trade deficit. When SoftBank invests in the United States, that's part of the capital account surplus. Let me break this down. I'm going to try to break this down in simple ways. I've done 3 or 4 or 5 posts on tariffs, trying to find a different way to explain it. I'll spend 5 minutes on this now, okay? So the way to think about it is the trade deficit provides the capital and liquidity for the rest of the world to finance American growth. Let me explain how that happens. So if you're an American and you buy a Toyota car for $35,000, you're handing Toyota Corp 35,000 American US dollars. Now, Toyota's an exporter. They export cars in the United States and they import steel and some other stuff from wherever they need to. So Toyota doesn't need those dollars. They go to their local bank. They say, hey, we want to sell these dollars. We want to buy yen. And the bank is trying to match buyers and sellers. So SoftBank says, oh, I'm a buyer of US assets. Can I have those dollars, please? So SoftBank buys US dollars and SoftBank is then acquiring US assets. In this case, investing in venture capital, right? If you have a US dollar held in Japan, it can only be put to one of 2 uses, only 2 uses. Either it can buy back American merchandise. And if they buy back as much American merchandise as they exported, then there's no trade deficit. That's one thing you can do with your dollars. You can buy stuff back from the United States. Or you can buy promises in the future. We call those bonds. That's what a bond is. Bond stands for credit. Credit has to do with credibility, has to do with trust. Or you buy stocks, could be private or public, which is even riskier, right? So you invest in American business. So SoftBank wants to back these American entrepreneurs who are going to own far more than SoftBank would. SoftBank's going to pay them at a much higher valuation. And if that company is successful, America will be the better winner of that trade than SoftBank or Japan, okay? So that's it. Follow the money. If you buy a car from Toyota, you hand Toyota 35,000 US dollars, it's in Japan, can only do one of 2 things, either buy back other American merchandise or services, and they do, like software, like Microsoft software, they do buy those kinds of services, or you buy bonds. And one of the reasons why these interest rates are going up, the long end of the curve, is because when the US has these tariffs on China, China has less capital liquidity to buy American bonds. Okay. By the way, I actually am all for tariffs on China. They have bad behavior. They need to be disciplined. You got to control. I kind of like this idea of ratcheting up tariffs if they don't behave. And if they do behave, then they ratchet down. So you got kind of how you deal with your kids sometimes, right? So, but these are related ideas, right? You're importing capital from the world. Now, some of you are saying, well, is it bad if we're selling American assets? Well, I just gave an example in venture capital. No, it's not. We're all better off when SoftBank launch a fund to invest in American entrepreneurs. Japan would love that. France would love that. Germany would love that. South Africa would love it. Brazil, they don't have that. SoftBank isn't knocking on their door saying, let's go build the next Silicon Valley. No, America's leadership position is in technology. The top 7 most valuable companies in the world were all birthed in Silicon Valley. And that dominance is set to continue to expand, not just Silicon Valley, but it's broadening out to other parts of the United States too, such as Detroit, such as Austin, Miami, New York City. Carnegie Mellon has a hub around it. LA, right? There's M13 Ventures out there. So that's a great. We got both sides of this. It's an incredible. And when you hand an IOU to someone, it's a promise in the future. We're getting real stuff today. Today, we get the car today, and we're saying, here's a bond, or we might pay back in the future. And by the way, what if the United States said, hey, China, we're not going to honor your bonds? I'm not saying they should do that, but I'm just saying that actually gives the United States more power in the relationship with China. There's an expression, if you owe your bank $1 million, you got a problem. If you owe your bank $1 billion, the bank has a problem. Remember the 2008 crisis, right? Like if the bank's got a big issue on their hands, everyone's going to get loan forgiveness. They're going to term out the rates. They're going to say, hey, we don't want to go bankrupt. Let's cut a deal, homeowner. Stay where you are. Remember like HARP and the HAMP programs and all this stuff. So China's the bank. They have all these IOUs from America, and it actually advances US dollar hegemony because where we're importing these goods from, we're exporting bonds. So the funny thing is, from the balance of payments perspective, the higher level, there is no deficit because the trade account deficit perfectly offsets the capital account surplus, which is another way of just saying when you buy the Toyota, the other parties either got to buy something else in the United States, like Microsoft services, Google services, whatever it might be, or bonds or stocks. Most of the time they buy the bond though. Most countries just buy bonds. Okay. So they're financing America and they've got a stake in the United States. There's this old expression, two countries that have McDonald's never go to war. That used to be true until the Russia-Ukraine war. Maybe GPT can fact check Ani, but the general idea is true, right? When goods and services cross borders, troops generally don't.